All right, good morning to today live trading section with Vetexx. So welcome to the live synthetic. Welcome to today live synthetic indices trading section. So today is 10th of February, and this is what to do here every day from 6 a.m. to 7 a.m. So if this is your first time coming across this channel, okay, every day 6 a.m. to 7 a.m. Monday to Friday, we will do live trading section analyzing the synthetic market. Okay, so that is basically how we do it. So today we are going to be analyzing about 14 pairs in the synthetic market and then see what the market has for us today. So if you see our setup, we are going to be taking it. If you don't, we sit on our hands until a better opportunity shows up. So what I'll be doing right now is checking those pairs one by one, and then let's see if we have something tangible for the day. All right, so I'm going to be checking right now, and then let's see how it goes. So as because of the explanation or the analysis, if you have any question, you can always ask, and then I'll do it to answer. All right, so let me just start by analyzing the first pair, which is we have VTNS, and let's check what VTNS has today. So first of all, before we analyze any trade, we always do what they call a top-down analysis. Okay, so and the model we use is called the advanced market. And top-down analysis basically means analyzing the market from the higher time frame to the lower time frame, trying to get your direction, where the price is coming from, and then where the price is going to. And once you know this, all you have to do is to look for your continuation. All right. So once you get your continuation, the rest is then walk through. Okay. So first of all, this is how the model works. So we have a sweep of liquidity, a break of structure, 50% retracement, a second break of structure, and then price taking the liquidity out, tapping to the point of interest, and then moving to the opposite direction. So this is what we always look out for in the market. Okay. First of all, we have a sweep of liquidity, which is here. It's called the transactional liquidity used for correction, and then we have this, and then we have a structural liquidity, which is here, and we have a protected high, which is here. Okay, so this transitional liquidity is for correction, while this structural liquidity is used for continuation. And this is our first break. Okay. So what we do now is I will go to the higher time frame to get our continuation, where the price is coming from, and then where the price is trying to go to. So once we get these two things, the starting point, this is the starting point here. The starting point is here, and then this is the finish point. We always have our starting point, and then we always have our finish point. Okay, so we go to the weekly time frame. All right. So take for example, this is the weekly time frame. Let me remove this. You go to the weekly time frame, you get your direction or your 24-hour time frame or the 4-hour time frame. All right, and then the 1 hour time frame to always get your direction of where price is coming from and where price is going to. And once you see that, you look for your continuation structure to the downside. Okay, which is going to be something like this. All right, it's going to be something like this, which is going to be on the 1 hour time frame. And also, if you don't see your structure on the 24 on the weekly on the 24 hour, you go to you go to the 4 hour structure and the 1 hour structure and look for your continuation, which is always going to be something like this. So this is basically how you're going to be looking for. So first of all, you get your direction, where price is coming from, and where price is going to. So once you get those two things at hand, you can then start looking for continuation to the downside. Okay, continuation to the downside. So take for example, you take out this continuation on around the 4 hour time frame or the 1 hour time frame. Okay, you can then scale down to the lower time frame again and still look for more continuation. Let's say you have a move like this. You have a sell like this. All right, you can mention. So it's basically you're looking for continuation, continuation, continuation to the downside. Okay. So once you get your structure, you get your continuation. On the 4 hour time frame, you go to the 1 hour or 30 minutes and look out for your continuation. Alright. You look out for your what continuation. So just like that, that's how you keep it up. The the target is taken out. So this now, take for example, this is your I said this is a bit here. So you have something like this. Okay. This becomes your what? Let's say you have a continuation like this. This becomes your if this is your 4 hour time frame or 24 hour time frame, and then you look for continuation on the 1 hour time frame. Okay. Say for example, this is the continuation that price gives you. This is what you are going to have. Alright. This becomes your sweep. It becomes your structural liquidity. It becomes your protected high. And then your POI here. So you take your entry from here to the downside. The same thing. So if this is a 1 hour structure that you see, and this is a continuation structure, this becomes your point of interest too. And then you take yourself to the what? To the downside. So this is how you keep it simple. Right? Keep it simple this way. You see a continuation structure, you look out for sell. If it is the same thing you do when you are selling, it's the same thing you do when you are buying. Okay. Same thing you do when you are selling, the same thing you do when you're buying. So you keep it up this way, right? You keep it up this way, like this, and then you get your finish point. Okay, so this is basically what you look out for. The same thing you look out for when you're selling, the same thing you look out for when you're buying. So this is basically the whole system, and this is how you trade the continuation on the advanced market. Right, so let me run through it. First of all, you have what? There are five rules that guide the advanced market structure. And rule number one, there must be a sweep of liquidity. Rule number two, there must be a break of structure. Rule number three, there must be a 50% retracement to the opposite direction. And rule number five, price must reject the opposite direction to take out the newly created low, which is going to give you your second break of structure. And rule number five is price must take out the newly created liquidity and continue to the opposite direction. So it's the same thing that is happening on the higher time frame. It's the same thing that should happen on the lower time frame. Okay. So once you get a direction on the higher time frame or a structure on the higher time frame, you go into the lower time frame structure, such as the 1 hour time frame or the 4 hour or the 30 minutes time frame, and then look out for a continuation structure in that 1 hour or 30 minutes time frame. And one price give you that, you can then enter the trade and then sell to the downside. So this is basically how the whole system works, and this is how you can also. So if you follow this model, you are definitely gonna make a whole lot of bounce doing this. So this is actually simple if you look at it. Okay, so now I'm going to be analyzing the first pair today, and let's see if you are going to be finding any continuation structure, any structure that we are going to be analyzing today. So let's get to business. So first of all, the first pair we have on our list today, which is uh, V10s. Starting from the 24-hour time frame, what do we have? From the 24-hour time frame, what do we have? Do we have anything that we can hold on to? There is nothing currently happening on V10s on the 24-hour time frame. Okay, there's nothing currently happening on V10s yet, and we sit on our hands at this point. So nothing is really happening here at the moment. Let me check the 1 hour time frame. The 1 hour time frame we had this. Okay, there's a sweep of liquidity here, and this the price took it out. Okay, this should be considered as it. So this was the setup that played out a while ago, which was this. You have this sweep here. So we had this sweep here. We have this structural liquidity which was around here, and this was the protected low. So this was the point of interest. So you have price coming into the point of interest, tapping it, and then moving to the opposite direction. So this is what we had earlier. So this can also be used. Okay, this can also be used. Let me go to the 5 minutes time frame and check something out. So we had this earlier on witness. So this was it here. We have a structural liquidity, we have a sweep, and then we have this. The price came into a give confirmation, came into a give confirmation, and then it's moved to the opposite direction. So this was it. So it took out our SL, but it didn't actually give confirmation here. So we wouldn't have jumped on it. But then we have a continuation here, which is this. So this is part of it because what this will be used as our what? This will be used as a structural liquidity because as our sweep because price has already taken this out. Alright, so now this becomes what? Our sweep for this. Okay, we have this sweep, we have this, and then we have price coming down here. So the same thing we do for as a sell here is the same thing we do when we want to buy. So you can see this is the continuation structure. This is the initial structure, right? Which we have this, and then we have a sweep here protected high this. So price tap into it. So this is the continuation structure. So price tap into it and then tap into our supply and then it sold off. So this was our risk to reward. Okay, so this is where price smashed the TP and then came back all the way here and then went straight to the full target. So this was a good sell. This was a good buy. This was a buy structure. Okay, so this is what we had earlier on VTNS. So the next pair we are going to be checking out is next pair we are going to be checking out is step 200. So let's check step 200. If you have anything good on step 200. Starting from the 24-hour time frame, step 200 is bearish and we haven't gotten a clear direction yet. So we'll go to the 4-hour time frame and see if you're going to get anything good. So on the 4-hour time frame, nothing is really happening yet. So this is what we are going to be anticipating. So on the 4-hour time frame, we'll have this. We have protected high. We have here, which is our structural liquidity. This is this. We have this, and this will become our point of interest. So we're anticipating price to tap into this point of interest, alright, and give us this. Come here, then we can sell. So this is what we're anticipating. If price tap into this point of interest, we're anticipating a sell continuation. Okay, so price will also give us this. So this is what we'll be anticipating on step 200. So this is what we anticipate on step 200. So if price do this, then we have confidence. We'll take the trade. So until then, we'll be sitting on our hands and then watch what is going to happen. Alright, so the next we will be checking is step 500. Let's see what step 500 have for us. Okay. So starting from the 24-hour time frame, let's check step 500. Where's the price trying to sell from? So first of all, we have price didn't take the structural liquidity out. So let's check the 4-hour time frame. On the 4-hour time frame, where is price trying to sell from? Okay, we have this. Not really, not really, not really, not really. So okay, we have this. Wow, wow, okay. So we have this 1 hour structure on step 500. So more like this, is it? We check the 1 hour time frame. So we have this on step 500. We have a sweep from here, and then we have this, and then these are protected high. So this, let's check. So this is our supply level. So we have this POI here. Let's check if price actually tap into the point of interest. So price tap into it, confirm, and then did all of this and sold off. Did all of this and sold off. So if we take this trade, our SL will be somewhere around here. But then we got stopped out. We got stopped out. So we had this move. It was a beautiful move. So this is what we had earlier on step 500. Unfortunately, we are not able to take it. It would have been a beautiful sell. Okay. So currently, what are we anticipating? We're anticipating price to do this. We're anticipating price to do this again. And we're waiting for price to tap into a point of interest around here and then give us a continuation. continuation, tap into appeal and then sell off. So we'll be anticipating this. If this happen, then we'll have a very beautiful sell to take again. So we'll be anticipating something like this. So yeah, until then, we'll sit on our hands and then watch what is going to happen next. But we already have a trend or where the price is coming from and then where it's going to. Is this. So let's check the next pair, which is what V51S. So V51S, starting from the 24-hour time frame, we have a buy continuation. So first of all, on the 24-hour time frame, we have it. You see the trend is bullish, but on the weekly time frame, price smashes its target. So what do we have now? If you go to the 4-hour time frame, if you go to the 4-hour time frame, you discover we have our what? Let me open it a bit. Okay, on the 4-hour time frame, this is what we have. Okay, first of all, we have what? Our sweep of liquidity here. Okay, we have a sweep of liquidity on the 4-hour time frame. We have what? Our first break of structure, which is this, and then we have a structural liquidity. This is a 50% retracement, structural liquidity. Now, on this trading model, once you see the structural liquidity, it's used for continuation. So once price take it out, okay, price will move to the opposite direction. You can see. So then we have our second break of structure. Remember, the advanced market structure has two break of structure. So this is first break of structure, second break of structure. First sweep of liquidity. This is the second liquidity that needs to be swept out. This is called transactional liquidity, which is used for what? Correction. This is called structural liquidity, which is used for what? Continuation. And then we have a protected low here. So the whole of these zones becomes what? Our point of interest. So what do we look out for next? We look out for a price continuation to the opposite direction. Now, this is the 4-hour time frame. Remember, this is the 4-hour time frame. Now, what is the next time frame we are going to? We are going to the 1-hour time frame to check for our continuation. If you didn't see it on the 1 hour, you can just go to the 30 minutes, right? Then let's check 1 hour. If you see the 1 hour if you come to the 1 hour, you discover we have something. All right, you discover we have something, which is what? If you can spot it, let me take this off. So we have a structure on the 1 hour, and we'll be anticipating price to come back to that zone. So first of all, we take our structural liquidity from here, our sweep from. I think we can use this. Okay, this is a sweep from here. Let's drag it all the way to this point. No, we can't use this. Okay, there's another sweep we can use from here. Excuse me, which is this. Price giving us a sweep. Remember, this is the 1 hour structure, and then we are looking for the continuation pattern. So this is a sweep. This is your structural liquidity. Remember, this is the 1 hour, and then this is your protected low. So this zone becomes your what? Point of interest. Now, what are we anticipating price to do? Anticipating price to come into this zone and then continue to move to the opposite direction. So this is the setup we have currently on V51s. All right, so this is what we are going to be anticipating on V51s. So you be on the lookout. Be on the what? On the lookout. So if price come back to this zone and then tap, okay, this is actually going to be our what? Our full take profit level. Okay. Well, if you can't hold, okay, you can always close your profit. You can always close your trade here. So you can just be waiting. You might put it on your watch list, and then you can be waiting for price to come and tap here and then move to the opposite direction. So this was the same thing that happened here too. So the same thing that happened here. Alright. So this is a 30-minute structure. So once price tap here, because price is already in the zone here, we had this sweep of liquidity which is very tiny, which is here. We have this sweep of liquidity, and then we have a structural liquidity, and then we have what? A protected low. This is a protected low, and this becomes what? Our point of interest. So you can see that price still come. This is a continuation. If the price come back to this zone again, tap into the point of interest and then bought to the upside. Okay. So after buying to the upside, if you have been holding the trade, you can hold the trade for quite a very long time. So this is the take profit level you can use on the 1 hour, or you can use the 4 hour take profit level. But if you have been holding this trade, you would have made a whole lot of money. So you see how far it went. Okay, look at this. Look at this buy. Might have done your 1 to 15, 1 to 20 risk to reward, and then close your trade at the end of the day. So this is how far it went. So if I was taking this trade, I would have closed somewhere around here, because you look at what price, the price it came back to the point of interest again. So one thing is for you to know how to analyze. Another thing is for you to know how when to enter trade and when to exit. So those things are very, very important too. If you're a trader, you know how to enter trade and also know when to exit. So there's no way you tell me you have already seen your $100 turn into $1,000, or your $100 turn into $2,000, and then you watch it come back, um, and watch it burn again. That is really not good. Okay. So this is what we are anticipating on V51s at the moment. So this is the current point of interest that we have. All right, let me take this out so you can see it clearly. If today is your first time of joining our live session, do well to subscribe, do well to like the video, and make sure you share to your friends so that they can always join. So what we do on this channel is every day 6 a.m. to 7 a.m. Monday to Friday, we analyze the synthetic markets and basically show you how I trade, and then you can also learn from it. So that is it. So this is a setup we are anticipating currently on V51s. Okay, so we have this on V51. I'm going to save it and then share it in the Telegram community. Alright, so the next pair I'm going to be checking out is V75S. What do we have on V75S? So let's check. Starting from the 24-hour time frame, V75S is bearish. It's freaking bearish. So you can see clearly we have what? First rows of the advanced market structure. We have a sweep of liquidity, which is this. Oh, sorry. We have a sweep of liquidity, which is this. We have what? A protected high here. Remember, there must be two liquidity and there must be two break of structure. And this is the first break of structure we have here. This becomes what? Structural liquidity. And what do we have next? We have our second break of structure. What is the work of the structural liquidity? Once price take it out, price will continue to move to the opposite direction. So this is our point of interest, and then see price moving to the opposite what direction. So once this zone, as price give us a move, as price tap into our 24-hour time frame, what do we do next after this move? Okay, we'll go to the 1 hour time frame and look for our structure, our continuation structure there. So let's see if price actually did that. So on the 1 hour time frame, we had this. In the PY, price give us this. Okay, price give us this. Give us, let me take it. Price give us sweep here. This is 1 hour time frame. Price give us a sweep of liquidity. It give us a sweep of liquidity. Give us what? Structural liquidity. It give us a protected high. Alright. First break here. This is the first break. And here is what? This is second break. And this is our what? Point of interest. What did price do? Price stop us out. Stop us out. This is it. Stop us out. So what do we do next? Price give us another move. Okay. So if, excuse me, let me play it back to 4 hour. Let me show you something. So since price take us out, it gives us another continue, it gives us another opportunity. So this becomes a sweep that we use. So there's a sweep here that we use. So this is it here. Okay, that becomes our sweep of liquidity. Let me take it back to the 1 hour. So we have this, and then this becomes what? Structural liquidity. So this is our protected high, first break, and then this was our second break. Sorry, this is the first break. Okay, so this liquidity from here you can consider. So this is our sweep of liquidity. This is break of structure, and then we had our point of interest here. So what did price do? Price come in, tap into it, and move to the opposite direction. So even if you catch this 1 hour sales, you are going to make a whole lot of bounce already. So this is it. Price sold off from here. Sold off from here. Okay. SL was somewhere around here because you use confirmation entry, and then this is how price move. You can see how price has been moving. So let's say you catch the first entry and you know how to swing. You have still been in this trade. Look at this. This is crazy. This is crazy. Because I've given you like 1 to 200, 300 risk to reward. So if you have been holding this trade, so if you have been holding this trade, I'm holding it since 21st of November till 18th of February. Today is February, till 10th of February. That's crazy. So this is it. All right. Now the next, so if you check down, okay, if you go to the 1 hour time frame, there are more structures that formed. Okay, there are more sets that form. Some of those sets we were not able to take some of them. Okay, we had. Do you have anything here at the moment? Hmm, let me check. Let me check. Currently, I'm not seeing anything here. We have a sweep here. This, that. Okay, okay, okay. Okay, we have the continuation here, which was somewhere around here. So this was the sweep that we had here. We have a sweep here. I'm coming. We have a sweep here, right? We have a structural liquidity here. We had what, a protected high here. This is our first break of structure. Okay, this is our first break of structure, which is right here. And this is what, our second break of structure, which was here. Okay, okay. So this is where we got our continuation entry. So this is it. Let me go to the 5 minutes time frame. If it's going to open, I doubt if it's going to open now. I really doubt, because it's been long. Okay, good. It's open. Good, 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 good boy, good boy. Perfect. So on this 1 hour time frame, this is the continuation we had here. Okay. So we had this, which was here. We had a sweep of liquidity here, which was there. And then we have what? Our structural liquidity, which was here. Remember, this is the continuation. And then we have a what? A point. We have this is it. And this, we are using this as our what? Structural liquidity as our point of interest. So price tap into it and then give us a continuation. And it confirmed. So immediately it confirmed, it started moving to the opposite direction. So we had this trade all the way from up here to the downside. So this is it. So this is what we had then. Immediately price confirm is move and then smashes the target. It's moved, smashing the target. So this is what we had on this 75. Then something happened again. We had another uh, we had another buy. So this was our what, structural liquidity. So this was our sweep. Because remember, we had this, we had this, uh, we had this sweep here, right? We had this sweep here. Is we have a protected high here. We have the sweep here. We have a protected high here. We have a break of structure here, which was here. So price gave us this sweep as a continuation. So this was the first point of interest on the 1 hour time frame. Alright, so price gave us a sweep and then a structural liquidity, and this becomes the second point of interest. So what happened? Price came into it, give a confirmation. Let me take this or not. Give confirmation, and then what? This was the full target. What did price do? After price gave a confirmation, come into it, and then it sold off and smashes targets. Sold off and smashes the target. So we had this sold off and we had this sold off. Okay. So this is it. This is what we had on V75-1S. Alright, so price actually gave us these two again in the continuation structure. So we had this 1 hour time frame, and then price coming here. Initially, if we have been aggressive and trying to enter the trade at this point, we would have been stopped out. But luckily, we didn't because we are using fractal confirmation. So price come here instead of us, but to give confirmation. Normally, we would have entered and price would have stopped out, but then we didn't do that. So this is what we do: continuation, this, and sell to the downside. Okay, continuation, this, and sell to the downside. Okay, I'm going to be checking another trade. So illustrating what I just did. Okay, this is what I did. So first of all, price give us a sweep of liquidity here, a protected high. Price break the first structure. This is our first break of structure with 50% retracement, and then price come down, take out this newly created low to give us what? Our second break of structure, and then price tap into the point of interest. Okay, so this is, for example, this is a 1 hour structure, right? Now, once price tap into this structure, it will give you what? A continuation, which is going to be like this. All right, price has given you a continuation, which is something like this, and then a move like this. This is a 50% retracement, tap into your point of interest, and then sell to the downside. Okay, so if this is the 1 hour structure, this is what we have. Okay, so what do we now do? This becomes what? This is your first POI, and this is remember, we are trading the continuation. Okay, so this is already your POI. Okay, this is your POI because you have what? This is your first break of, this is your sweep of liquidity, and this is your what? Second break of, first break of structure. This is what? Structural liquidity, and this is what? Second break of structure. Okay, so this is the initial point of interest. All right, and this is the starting point, and below here is the finish point. So in your point of interest, all you have to do now is to look for your confirmation entry so that you can have a second confirmation, then you can hold the trade to its target. Okay, so now this is your continuation now. So I'm going to use this structural liquidity now as a sweep for my new continuation. So this becomes a what? Sweep of liquidity now. This becomes what? This becomes what? My what? Structural liquidity, and this is my what? Point of interest. All right, and this zone becomes what? Point of interest. All right, so this is the first break. I'm going to be using this as my first break of structure now. All right, so once price come into this point of interest, give me the confirmation, then I can take the trade and hold it to the downside. So this is going to be my SL at this point, and this is this. Then I'm going to be holding this trade here. All right, so this is basically what I just explained. Okay, this you see right here is what I just did. Is what I just did here. Okay, is what I did here. This is the same thing I did here. So it's the same thing I did here also. So I believe this is clear enough. This is clear, very clear enough for you. So if you understand this and you are getting value, don't forget to like, don't forget to subscribe before you go, and then to help the channel grow to reach out to more people. So this is what we have on V75 1S. So the next pair we are going to be checking, we are checking V25 1S if we are going to have anything like that. And if we have a continuation, we can always buy. So starting from the 24-hour time frame, V25 1S has been bullish for a while, for the longest, for the longest. And let's check the 4-hour time frame if we are going to see what we always look for. Okay, so this first of all we have on the 4-hour time frame we have what? Our row number one, which is there must be a sweep of liquidity, which is right here. The sweep of liquidity right here, and then there must be what? A first break of structure, which is right here, and there must be a 50% retracement to give us what? Structural liquidity, which is here, and then there must be what? A second break of structure, which is this. And also we have what? Our protected low. So the whole of these ones becomes what? Our what? Point of interest. Our point of interest. So this whole thing I explained just now, if I go to the 1 hour structure, if I go to the 1 hour time frame now, you are still going to see the same thing all over again. Okay, so let me go to the 1 hour time frame. Let me show you something real quick. So on the 1 hour time frame, we have a continuation structure, which is this. Okay, let me take this out. So for the fact that understanding where to enter trade and understanding where to close the trade is one thing that is actually going to also help you very, very well. So this is what we have. We had this. Okay, let me take you back. First of all, we have what? This is the 1 hour time frame. So when price moved from the point of interest, price gave us this, a sweep of liquidity, alright, structural liquidity, and then we have what? Protected low, and this is what? Point of interest. So price tapping the first time, okay, and then this now becomes our new structural liquidity because price didn't tap into the POI that we marked down. Okay, so it left and then came back. All right, this is 1 hour time frame, remember, and then price came back. So as price came back, so immediately price came back, price gave us tap into the POI and then move to the upside. Okay, this matches TP on the 1 hour time frame. All right, it matches TP on the 1 hour time frame. I would have closed somewhere here because I saw a reversal sign for it around this point and price was trying to respect it. That is why you need to understand where to enter trade and where to close your trade. And after that was done, okay, if you go to the 30 minutes time frame, price did the same thing again inside the same POI. So price gave us this, a sweep of liquidity. Let's give us this, a sweep of liquidity, a protected low, and then a protected low here, and then a point of interest. So price tap into this point. Okay, price tap into this point. Remember, this is this at this point, price has already entered deep inside the POI. So price gave us this. Okay, since it gave us this and then respected it, it came back and gave us this, and this is what we have. So as price come and give us this, we have this move to the opposite direction. Okay, so this is where price bought up. All right, but if I'm in the trade, I will close somewhere around here for reasons best known to me. Okay, and then you're anticipating more continuation to the what? To the upside. Okay, so look at this beautiful sell, look at this beautiful buy. Okay, let's go to the 1 hour time frame. On the, okay, let's check something here. Let me go to the 15 and see clearly if this is something we would have taken. Is this something we would have taken? So this we have taken this. Nah, no. This didn't meet our rules. This is good enough. So this was the setup that we missed. This is a sweep of liquidity here. Don't know how we missed this. This is a sweep of liquidity here, and then this was what is structural liquidity. and this was protected, and this is our point of interest. Let's tap into this. Wow, this is beautiful. Let's tap into this and then continue to the opposite direction. You can see how this is very good. This is beautiful. So this is what we had on V25 I think I made this trade because I wasn't active yesterday. So this is it. Okay. So this was the structure. Okay, structure, sweep of liquidity here, and then this was the fractal confirmation continuation. So price did this and then move to the opposite direction. It's almost at TP. Okay, so this is very nice. Okay, we have this too. Okay. Alright, so let's do the next pair. I believe you all are understanding and you're following. So go to the 50 minutes time on V51 index. What do we have? V51 index, what do we have? Okay, we have on the 24-hour time frame, there's nothing happening currently. So go to the what? Go to the 4-hour time frame. Let's check the 4-hour time frame. On the 4-hour time frame, this price is trying to smash the target. So let's go to the 1-hour time frame. What do we have on 1-hour time frame? Is there something happening on the 1-hour time frame? On V50s, so this. What is happening here? We haven't gotten anything happening on this place. Nothing is happening here. Nothing is happening here at the moment. This nothing is happening on V51 index right now. It's trying to sell on the 1 hour, but there's no confirmation there for me to enter. So I'll be on the lookout, right? Be on the lookout. So the same thing that I explained, the same thing that happened here. So look at this beautiful set. We have a sweep of liquidity here. Okay, we have a protected high here. This one has already played out. And then we have what? Structural liquidity. And this is what? Our point of interest. So what do we have at this point? If you see, let me take this out. Remember, this is now the point of interest. What do we have? We then have what? We have what? A sweep of liquidity, which is here. We have what? A protected high, which is here. Our time is almost up. And then we have the structural liquidity on the 1 hour time frame. So what did price do? Let me take this out. Price came into it, come into this point of interest, tap into it, take out the structural liquidity and move to the opposite direction. So you can always, whenever you enter the trade, you can always hold it to your risk to reward, your desired risk to reward, and then you can close your trade. Alright. But then if you see reversal sign, you can always close your trade once you've done at least 1 to 4, 1 to 5, 1 to 6, and then close. So this is what happened on this one too. And you can see price sold off to the opposite direction. So on this point, what price is trying to do here is, if this price does this, if I'm going to be considering this as a shape of liquidity, and if price, I'm anticipating price to do this on this time frame. Once you break this structure, I'm anticipating it to come to this zone again, and then I'll sell to the opposite direction. So this is just my plan for V50. This is just my plan for V50. So I hope it does this. Then this will become my what? Point of interest. Then I'll be anticipating to take a sell from here. So let's wait. We'll be on the lookout if it does that. So this is it. So this is what we'll be doing. Alright. we'll be on the lookout for these cells. And then this is what our sweep, and this is what our POI. So this is what I'm anticipating currently on B50. So if it does this, good, beautiful. All right, so be on the lookout for these too. So we've come to the end of today's live session, and I'll see you guys again tomorrow. So if you're here to join the Telegram community or you're watching this video on live replay, do well to like, do well to subscribe, and do well to join the Telegram community. So whenever I go live, you'll be the first to be notified. All right. So I'll see you guys tomorrow, 6 a.m. to 7 a.m. Don't forget to share this video to people who are interested in learning to trade forex. So I'll see you tomorrow and do have a nice day. Peace out.